Did Wall Street just get banned from buying houses? What this really means for buyers and sellers in 2026. Hey everyone, I'm David Hittle, your real estate specialist doing business as Shop Kentucky Homes LLC with United Real Estate Louisville. And you may have seen some headlines recently saying something like institutional investors are now banned from buying single family homes. Or Wall Street just got kicked out of the housing market. And naturally, a lot of buyers and sellers are asking, is that actually true? And more importantly, does this change anything for the housing market in 2026, especially here in Kentucky? So that's what I want to walk you through today, calmly, clearly, and without hype as you're used to. Because the reality is, what most of the headlines are saying and what this actually means in the real world are two very different things. So, first off, what just happened? So here's the clean version of what's being reported. The federal government has taken steps aimed at limiting how large institutional investors participate in the single-family housing market. Specifically, the focus is on restricting federal support, financing programs, or guarantees that large investment firms may rely on when purchasing single family homes. The stated goal is to reduce competition between everyday home buyers and massive pools of corporate capital. Now, here's the key thing to understand. This is not a blanket overnight ban on all institutional home purchases. It's more of a regulatory shift around how and with what financing certain large investors can buy single family homes going forward. And the details, as always, still matter a lot. So, what this does not do, this is where your headlines can get misleading. This policy does not mean that no company can buy houses anymore, that cash investors have been outlawed, that small landlords are affected, that hedge funds instantly disappear from the market, or that prices are about to collapse. Most institutional investors do not rely on the traditional federally backed mortgage products to buy homes anyway. Many use their private capital, private lending, or cash. So the immediate dramatic impact that social media is implying just is not there. So why does this even exist? Well, this move is largely a response to long-term affordability concerns, which we've talked about. Over the past decade, institutional investors have increased their presence in certain metro markets, especially entry-level price ranges. In some cities, that absolutely added pressure to supply and competition. So, from a policy standpoint, the intention here is to reduce corporate competition, improve access for owner occupants, and encourage long term home ownership. Whether this actually accomplishes that long term is still very much an open question. If this kind of calm, real world market breakdown is helpful to you, make sure that you like this video and subscribe to the channel. I put out regular updates explaining what's actually happening in our housing market without all the hype and without any of the scare tactics. Here's the part that rarely makes the headlines, the reality check that most people are missing. Institutional investors nationally represent a relatively small percentage of total single family home ownership, somewhere around like 3%. In many markets, including much of Kentucky, they are not the dominant buyer group. What actually drives prices more than anything else is supply, demand, interest rates, household formation, local job growth, and new construction levels, not hedge funds. So even if institutional buying slowed slightly, That alone would not suddenly fix housing affordability. So what could this mean for buyers? Well, if you are a buyer here in 2026, here's the honest answer. This policy change is not some magic key that suddenly makes homes cheaper. But in some markets and in some price ranges, it could reduce investor competition marginally. It could create slightly more affordability. It could improve buyer negotiating power at the margins. But the biggest factors still remain: mortgage rates, local inventory, how many other buyers are active, and how aggressively sellers are pricing their homes. So what could this mean for sellers? Well, if you are a seller, this does not mean that demand is going away, that investors won't buy your home, or that you should panic about pricing. Most sellers in Kentucky are selling to owner-occupant buyers, move-up buyers, or relocating families, and not to hedge funds. So your pricing strategy in 2026 should still be based on local buyer behavior, local inventory, days on market, comparable sales, and interest rate sensitivity, and not the national political headlines. So here's your local Louisville and Kentucky reality check. Here's what actually matters locally right now. In the Louisville area market recently, new listings are up significantly year over year, and solds are down year over year. Inventory in our area is building, and buyers are becoming even more selective due to that new inventory. This means the real leverage shift in 2026 is not going to come from Washington, D.C. It's going to come from more homes hitting the market, slower buyer absorption, higher price sensitivity, and longer decision cycles. That's what sellers and buyers should actually be watching right now. The big takeaway here is the grounded truth. This policy shift is symbolically important, it's politically meaningful, and it's potentially helpful at the margins. But it is not a housing market reset button. The 2026 housing market will still be driven primarily by interest rates, local supply and demand, buyer affordability, pricing strategy, and economic confidence, not whether a hedge fund buys 2% fewer homes this year. So whether you are planning to buy or sell in 2026, don't make big real estate decisions based on headlines alone. Make them based on local data, local trends, your own financial position, and what buyers and sellers are actually doing in your market. And if you'd like help understanding what this means specifically for your situation here in Kentucky, feel free to reach out. I am David Hittle, your real estate specialist doing business at Shop Kentucky Homes LLC with United Real Estate Louisville. Thanks for watching this video, and I'll see you in my next video.